All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Tuesday, December 30th, 2025. I will only be able to say 2025 one more time after today, as we are one day left into 2025 and we'll be entering 2026 very soon. S&P 500, I think, basically sums up what has happened today. Folks, it is down 0.03%. That has been the movement on the S&P 500 today. Average volume is 74.3 million shares. Today, we have 34.3 million that have been traded. I mean, quite literally, nothing has happened. I mean, that's it. Like that's really the story of the day. Nvidia barely down, Palantir's down 1%. Got Grab, that's down 0.5%. Zeta got up to 2130. Great performance by Zeta. That's back down to 2080, still up 1.9%. Good performance, but nothing crazy. Rocket Lab was up 6%. Now it's up 1%. Got Redwire that at least is making a nice move. That's up 14%. But the Qs flat on the day. Bitcoin basically flat on the day at 87,000. Robinhood right there falling below 116. So you got some people take some profits right there. That's down 1.73%. But it's just like, there's nothing. Wall Street is absolutely on vacation. I mean, I looked at the volume 5 minutes before going live just because I didn't really look at the S&P over the past couple hours. And so I just took a peek at it and I'm like, oh, wow, nothing. Okay. What's the volume? Volume is 45% lower than what it usually is. Yesterday, it wasn't that bad, at least not from what I remember in terms of the lack of volumes coming in, which means this Santa Claus rally or perceived Santa Claus rally or idea that there would be some foundational element that can push us forward, it's just not happening. There's just not enough traders, not enough momentum, volume, excitement to come into the place to be able to create that energy. It's just not there. And because it's not there, I mean, there's not much more that we can do at that point other than be like, all right, we got 2 days left. And those 2 days are really 1 day left now after today. And that's what we got to end out the year. Corey right there, that's down 1%. Applied Digital, that's down 2.5%. All the AI data center plays, those are down about 2-3%. CleanSpark down 2%. Nebius down 1%. I mean, again, you're just not seeing any massive excitement right there. MicroStrategy 156, that's up 0.52%. BMNR is flat. It's down 1.6%. It was up 0.5% during the day. Now it's down 1.65%. Ethereum and Bitcoin not really making a crazy move. ETH 2962, that's up 0.6%. And then Bitcoin at 87.9. So, yeah, I mean, there's nothing. There's like, we got some headlines we'll talk about. We will have a special guest join the show to help me engage in the giveaway, which we'll be talking about in the next about 12 minutes. But, I mean, let me know if anyone made any moves today to their portfolio. This whole idea of the end of your rally, fund managers are going to be chasing, you're going to see momentum from different angles. None of it. You've got none of it. You got some individual stocks that are getting some momentum, like a Redwire today, but I mean, that is not your Santa Claus rally. Your Santa Claus rally is a broad-based market rally, which many people predicted would be S&P 7,000. And we're not going to get there, and you can't blame anyone that have the idea that we could get there because we're basically at all-time highs. 689 is your all-time high, or 690. We're at 687. So if we don't see this mystical 700 number, hopefully we will get there in 2026 due to earnings growth. But I just think the market's kind of exhausted, and Santa probably came early. And you got a lot of excitement and momentum. We did recover a decent chunk of what we lost in November. We're still going to be pretty green for the month, even if we end at these levels. And that's our year. And it seems like that's how 2025 is going to end out. But that's what we've got here on the day. And I mean, realistically, silver and gold have had a more exciting day than freaking the S&P 500. Gold is up 0.43%, silver up 7%. So again, going short silver yesterday, just not the right strategy, as that one is fundamentally rebounded, especially on the miners as well. And silver not seeing that reversal that it saw yesterday immediately when the market opened, that one holding up 7% on the day. That's what we got. That is what we got. So let me know if anyone did anything. I see Steve said I bought some AA, bought some Amcor. I see people saying bought some Grab, bought some Zeta, bought some APLD. Bought a little bit of Nebius, VG. Where was VG? VG hit 730 in the morning. You see, even VG, it had some decent volume in the morning, but did we hold 706, right? So we lost 30 cents. Now the average volume on VG is closer to 10 million. We're at 7.4. Yeah, there's just not a lot of people trading, not a lot of institutions trading, not a lot of money coming in. Even if you're seeing some down movement on certain names, I mean, is that down movement even real if there's not a lot of volume coming in to potentially buy that dip if it would be buying that dip on a day where there is real volume. So realistically, I don't think we're going to see much action until Monday of next week when we start off 2026. But this is what we have to officially end out the year. And then we have one, and we'll see where it goes from there. I see some people saying bought some Joby, bought some BMNR. Other people saying I cut BMNR. That's fair. I can understand why people are either taking profits here or consolidating here. Julian says maybe 2026 will be the opposite too. Everybody is super bearish. Yeah, I mean, look, the other thing about 2026 is that every S&P 500 price target, we looked at Robinhood's price target yesterday from Stephanie Guild, their macro analyst. She had 7,300. Yet most people had 75, 7,700. It's a relatively basic year compared to the past 3 years of this bull market. It would be up about 7 to 10%. Still an amazing year. It's just not the type of year that we've been used to. So maybe that level of, I wouldn't say bearishness, but like caution and lack of optimism to the upside potentially leads you to have a massive year. But there's just so many things that we have to get ready for, whether it's whatever Trump is going to do, midterms, potential government shutdown, earnings cycle that's starting in a couple of weeks. And we just need a lot more data to calculate what's going to happen before we can make some real predictions going into 2026. Now, we did have the FOMC minutes, which, again, were a nothing burger. Most participants supported a 25 basis cut as per the FOMC. A majority noted inflation has been above target for some time and had not moved closer to 2%. Participants generally saw inflation risk tilt to the upside, though several said those upside risks have decreased, including Fed Chair Powell, that basically said inflation is not the issue, the labor market's the issue. Many said core inflation was pushed up by higher tariffs that boosted good prices. Many expected tariff effects on goods inflations to wane, but were uncertain about timing. Again, hedging their arguments that inflation has been pushed up by tariffs by saying that it should be a one-time thing. Some participants who opposed the cuts said progress towards 2% had stalled and they wanted more confidence. Inflation was moving sustainably towards 2%. Some participants suggested that under their economic outlooks, it would likely be appropriate to leave rates unchanged for some time after December. We already knew that. We're not even pricing a rate cut until April, until next year. So again, none of this stuff was like really new or different. And then the broader thesis of the FOMC minutes was that we have to be data dependent and see what happens with the labor market and with inflation data. So even that wasn't enough to really impact the market or have any type of meaningful movement to the upside or the downside. And I think most people expected that was going to be the case. Now, we talked about this yesterday. This is a specific chart on money market funds from the retail sector. So money market funds in general are at 7.65 trillion. This is from the ecovinus.net, and the source is from the Federal Reserve. So they're kind of citing an aggregate data from 2017. In November of 2025, so this is missing December, but this is going back to November, retail money market funds were 2.25 trillion, up 270 billion year over year. So this is people like you and I taking some of our money, putting it into money market funds, not just institutional investors. And that's a significant portion when you really think about it. Because if the overall total money market funds are 7.6 trillion, retail at 2.25, that's about 29.6% of retail investors putting their money into money market funds. That is actual money that I think could leave money market funds if there's an incentive for it to leave. And rates coming down has not really been the incentive over the past couple of months. But if rates do more meaningfully come down, maybe that is where the incentive comes into play. So you still have a lot of money on the sidelines as well, which is probably why you're not likely seeing this S&P 7,000 yet. That money is continuing to stay on the sidelines. The 10-year right there, 4.13, is slightly up here on the day. Why no rate cut in January? Well, from the most basic arguments, GDP growth was pretty high in Q3. And that's why you can see right here, there's a 14.9% chance, basically a 0% chance for a rate cut in January. If we got a crappy GDP number or a more exaggerated jobless claims number over the past couple of weeks, again, inching towards 300,000, we're barely at 220,000. Maybe the Fed would be like, yeah, we really need to cut. But it's a good thing that we don't really need to cut, because it means the economy is healthy and earnings growth should be fine. But it also means that the asset price inflation that you usually get from rate cuts happening likely for 2025 is over, and probably for early 2026, simply because, and now Trump would not want that. Trump would probably want rates down to 2% tomorrow, but realistically, you're just not going to get a bunch of Fed candidates to easily say that starting in January, we've seen enough data where rates have to come down. Maybe it happens, just feels unlikely. But hopefully we do get some more rate cuts going into the end of 2026. So that's what we're looking at today. We talked about the January fact a couple of weeks ago. It's the historical tendency for stocks, especially small caps, to perform better in January than other months. Jason did talk about this over the past couple of weeks. And I mean, something like Redwire, you're kind of seeing that January effect in action as that's up 13%. IWM, that's actually down 1% on the day. I think IWM, which is a small cap ETF, is outperforming the S&P year to date. No, it's not. Small caps 12%. Look, I've never been a big believer in betting on small caps in general. There are specific small caps that I think are worth it, like Zeta, for example. I don't know if that literally qualifies as small cap, but at $4.5 billion, if you do some real fundamental analysis on it, I think that has a shot to do well next year. But I don't want to bet on an aggregate index of small caps simply because there's a lot of junk in this. So even if you just bet on the S&P, you outperformed it by about 7%, which I think is reasonable because you also got to sleep well at night knowing that you were buying Amazon, Meta, et cetera. Nothing too crazy. So you got small caps right there at 12.2%. Now KRE, the regional banks, and XBI, the biotech ETF, are a big part of IWM, and those have started to do a lot better. So maybe that momentum continues into 2026 as well. By the way, I looked at JP Morgan and Goldman Sachs today. JP Morgan is up 34% for the year. Goldman Sachs is up 58% for the year. And they have, like, none of the Mag 7 have even come close to touching the banks, which is that Citigroup is up 67% this year. I mean, it is absolutely incredible, the momentum in financials. And quite frankly, I think the momentum in financials probably continues next year with all the business deregulation, M&A, IPOs. Like, I don't see what the bear case is for financials outside of a recession, but the banks crushed it. And if we went long banks versus long tech, no. Oh, well, Google. Yeah, you're right. I forget about Google. See, if I had made Google a really big part of my portfolio, I wouldn't have forgot. I would definitely know Google is beating some of the banks at 65%. Unfortunately, this was just not one that became a massive part of the portfolio. But for those that did go heavy in this at 140, 150, yeah, this one is up double from those levels and then 70% for the year. So I guess Google's the only one that has beat the banks, but everything else has struggled to even get close. I mean, Meta is barely up this year. Amazon's done nothing. Tesla's doing better, given it's, got back into the 400s, but that one, is it actually green on the day? Tesla 454 ended up going red again. Yesterday, it fell 3%. Today, falling another 1% for the Tessie. That's it. That's what we got. Nate is not the special guest, but he will be the special guest next year when he starts his channel. And we'll make sure we get Nate onto the show so you guys can check out his channel as well. But yeah, there will be a special guest joining in a couple minutes. We're not going to have Technical Tuesday again today. There's no need to have technicals. There's nothing to technically look at. Got 1 day left of the year, and every stock is flat and or has no volume and or pretty much trading at the same level it was at last Tuesday when we did technicals. So yeah, I don't think there's going to be any major need to look at technicals. But starting next week, we're going to look at technicals going into the new year, and we'll get a lot of Jason's thoughts on how these charts look as per 2026. VG going red. Wow, just dropped below 7 right at the end. We got about a minute left until we close. Bitcoin 87 getting a red candle. Ethereum, again, there's just no volume. There's not much. But look, Tesla's average volume is 83 million today, 55 million. Google average volume 35 million today, 14 million. Again, SPY 75 million, average volume today is 39 million. Nvidia average volume 187 million today, 83 million. Like, there's not enough people trading here. And as a result, you don't have people talking. Where is Stock Talk? Dude, Stock Talk hasn't been tweeting all week because he's probably living and enjoying his life and having fun on vacation. Like, there's a lot of accounts that I know on X that are just not posting, and they're not posting because they're probably on vacation or something. So just like the institutional investors, hedge fund managers that probably aren't trading, I think you have a lot of retail investors as well that are probably not trading simply because they're enjoying the holidays. But we're here. We're live. It is Tuesday, December 30th, 4 p.m. The stock market is now closed. All right. We are done for the day as the market is now officially closed. This Worst stock market since 2023. What a shitty year. Yeah, 17% on the S&P. Unfortunately, just not a 2023, 2024 type of year. We do have one more day left. We'll see. And obviously I'm being sarcastic here. But look, at the end of the day, we got to be grateful for the year that we've had. Massive, massive momentum and excitement. It just didn't end up formulating until the end of the year, which is okay. It is what it is. And quite frankly, it probably tempers expectations going into the end of 2025 and early 2026. S&P 500 down about 0.13%. MicroStrategy up 0.14%. Bitmine down about 3%. Bitmine actually took a little bit of a dip right here, right at the bell. Not sure why, given Ethereum flat at 29.55. So probably had maybe an at the money that happened literally right at the close. It was at 29, then it fell to 27. But that one is down 3%. Rocket Lab right there, 70.45. Robinhood also fell. So maybe all the crypto plays. Did Coinbase fall? Robinhood fell below 116. Yeah, Coinbase as well, 231 right at the close. Got hit from 235 to 231. Big Bear AI was down 3%. Palantir was down 1.81%. NVIDIA down 0.34%. Again, Rocket Lab held on to a little bit of green. SoFi got hit as well today. SoFi got back up to 27, fell all the way to 26.56 as SoFi also came down on the day. CoreWeave as well, down 1.39. Applied Digital down 2.94. The Googs was flat. Tesla was down 1.17. And then again, the S&P 500 down 0.13% on the day. Basically, didn't too much. So there you go. That's what we got. Again, I just really don't think anyone should be complaining in a meaningful way if we don't see 7,000 on the S&P. Like, is anyone actually upset we're not seeing 7,000 on the S&P or some massive Santa Claus rally? Or are we just putting in the comments to put it in the comments? Because, we can all have fun and make jokes, but like, this has been an incredible year. And most of us bought a decent amount of stocks post Liberation Day. So it's like, I'm sorry, I'm not even sort of upset. And like, I'm not even like, no, it's been a good year. You got to be grateful for the year that you had. You cannot be upset that we're not seeing this run towards the end of the year. It's like, also, it's a run from all-time highs. So we're just expecting even more all-time highs. Like, yeah, that would be great to have, but if we don't have it, we don't have it. Like, you can't just force the market to do that, especially when the market's already trading at one of the most aggressive premiums it's had in history. So, yeah, maybe certain stocks have not done the best going into the end of the year. That's fair, especially the crypto-related stocks, obviously Bitcoin, Ethereum. But if you're 100% allocated to crypto stocks, then yeah, your portfolio is probably taking a hit towards the end of the year. But I don't think that's most of us. I mean, most of us have a portion of this stuff in crypto-related. A lot of us are rather well diversified into other names, even if it's just tech diversification, that have done much better than crypto. So I don't think it's enough to complain about or be super, super upset about. But overall, still not too bad. He says, I think if we wouldn't have been hit in October below the chop and pullback on tech, the lack of a rally right now would have been a lot more acceptable. Yes, well, that's fair. But again, that pullback that we had in October, again, that was from, one could argue, straight up euphoria. Oklo was $200 during that October top. I mean, at some point that had to stop. And obviously it's easy to say that in hindsight. If I was really smart, I would have bought puts on Oklo when it was at 198. It's hard to do that when things are running up. That's why it's really tough to time the market. Oklo down 3% here. But I'm not picking on Oklo here, just making it an example of no revenue companies got a $40 billion valuation at the top of October. And then you had the soybean tweet, and then you had the crypto liquidation. So at some point, this shit was all going to come down. It's just no one knew when. And so it seemed kind of inevitable. It's just, we've recovered a lot of that in a broad-based market rally as the S&P is again at all-time highs. It's just the Oklos of the world didn't recover. But if you were in NVIDIA and you topped out at 210 and now NVIDIA's at 188, is that the worst thing in the world? I don't think so. Now, if you were at Oklo at 198 or 140 or even 120, like, yeah, it probably sucks. But I don't think most people were balls deep into Oklo. So, yes, names are far from their highs, but they're not far to the point where they're like 50, 60% away from their highs. I mean, the fact that Rocket Lab got back to 70 as well is quite incredible. This one was actually 50% away from its highs. It's back at 70. Can't complain. Cannot complain too much about it. So That's what we have for today. We'll see what happens tomorrow. And then we will officially end out the year. So the special guest, I'll just say it right now, is Steve. He'll be joining. And it's you guys always know it's likely the milkman who's here. And he will be here as well. SMCI, HIMS, Hood, BM&R all down, and you keep saying you can't complain. Yeah, but again, this goes down to portfolio sizing. This goes down to portfolio. If 80% of your portfolio was SMCI at, where's SMCI? SMCI is at 29 at what, $50, $45? Like, you can be upset. But that begs the question, why was 80% of your portfolio SMCI? A large chunk of my portfolio is Hood, and you don't see me complaining about it at 115 because I think very explicitly when it got to 150 and I stopped buying after 120, I made that very clear. I was like, wait a second, 150 is getting ahead of itself. And so I can't complain that it's at 115 because it was at 29 in April. So no, I'm not complaining. HIMS from 60 to 30, like, yeah, that sucks if you're super majority in HIMS, but also HIMS was trading at 10, $15 for a long time before it broke out and had that massive run up to 60. Year to date, HIMS is still up 31%. You can't be mad at a stock. Now, if you bought it super high, like, yeah, I understand. But it's also like, that just means it was a bad stock pick for the year. That does not mean you can be upset at the market still being at 687. Like, I don't even think that's too crazy to make the argument. BM&R, I think we all know. BM&R, this was just horrible timing. And unfortunately, the timing on that is the timing on that. But again, did you go 100% BM&R? Like, that's like, you went 100% BM&R, there's a different problem there, which around portfolio diversification and portfolio sizing versus like BM&R as a stock that just didn't do well, because explicitly it did not do well. That's for sure. But it can't ruin your year. It can ruin part of your performance for the year for sure. Definitely didn't help my performance as we ended out the year, but didn't destroy the year, which is, I think, the biggest thing to kind of understand. All right, let's bring him on. Ladies and gentlemen, there is no reason to fear as we have 2 days left of the year. The milkman is here. This is why I do what I do. Off the dome rapping, baby. Steve, what's up?
Look at you. Good role model.
Dude, I got to make sure your intros are legit. I got to make sure. I have to.
So while you cannot complain, I got a bone to pick.
Okay, let's hear it.
You ready for the bone that I got to pick?
I'm ready.
Bring up a chart of Amazon.
Just a regular chart of Amazon?
Bring up a chart of Amazon for 1 year and then a 5 year, please. And then I'm going to share something.
Amazon is up 5% year to date, 5% over the 1 year, and 42% over the past 5 years.
And now bring up SPY 5 year and tell me where SPY is.
SPY 5 years is up 83%, double Amazon over the past 5 years.
Now, I believe that is, 84%. So now, I'm going to make a comment. Jeff Bezos, don't send a hit squad after me. But, admit, if you would be so kind as to share my screen. Hey, Jeff Bezos.
What is this?
Could you not dress like you're walking on the set of Yellowstone and get back to the office, please? Us Amazon shareholders need you back. Just saying.
Is this actually him?
This is actually Jeff Bezos, yes. And I don't even want to show you the other pictures from this article. But if you must see them, I will show them to you.
No, we got to see it now. We got to see it. Let's pull it up.
All right, so let's start at the beginning. So his wife is dancing on her seat while partying with Jeff Bezos in St. Bart's. Fine, whatever. Having a great time. But could we get out of the gym, get out off the set of Yellowstone? Like, this is I didn't have that problem with any of the other ones. This is the one I have a problem with. Because sure, you take a vacation, whatever, having fun. Okay, cool. You know, you go to some black tie event. All right, cool, whatever. But guy thinks he's in Yellowstone now instead of running a company. And I know he's not the CEO anymore, everyone. But I mean, you look at the performance under Bezos and you look at the performance under Jassy. I'd like Bezos to get back to work.
You know the crazy thing about this? What's his name? Larry Page and Sergey Brin did a talk the other day, and the person was like, "Why'd you come back to Google?" Because they're the founders of Google. They left like 4 years ago. He was like, "Why'd you come back?" And Sergey was like, I had this dream that in retirement I would just go to coffee shops and study and read physics books, and then I realized I was wasting my life, and I came back to Google. And Google's up 70% this year because the founders came back.
And now the last picture we're going to show, okay?
Maybe Bezos needs to come back.
Well, let's just show this. And keep in mind, this is basically Bezos at 30 and then 60, okay? At 30, he's wearing oversized clothes and he's basically full-blown nerd. And now, dude's jacked as hell 3 decades later when he's approaching Social Security age. Like, we need Bezos out of the gym. We need him back in the boardroom. We need him back in his office. Just saying.
He's getting to enjoy his life towards the end of his life.
He's earned it. And look, guy looks great. I hope I look like that. I wish I looked like that now. Hope I look like that when I'm 60. Like, the guy's won at life, okay? But at the same time, give me 10% of your time on Amazon. Come on.
By the way, we got a quick headline right here. Elon has just said XAI has bought another building for its Colossus, Tennessee data center. The plan is to take this training cluster from 230,000 NVIDIA chips to 1 million. Wow.
Boom. But hey, the AI trade is fake.
Bullish. Okay, so before we get into the giveaway, Steve, I just want to get your quick thoughts on this, and we'll talk more stocks after the giveaway. But I mean, I'm seeing a lot of comments in the chat right here of people being upset we're not seeing 7,000 S&P. Some of them probably being sarcastic, some of them actually mad. I mean, what are your thoughts on no say in a rally?
My thoughts are I still have half a trading session to be right.
That's true. No, it's going to be the full day tomorrow. It's not half a day.
Oh, it's full day. It's not even half a day.
Yeah, you got a full 8 hours.
Right.
No, but realistically, let's say tomorrow, like the volume, there's like, is it really? At this point, I'm following you saying I don't care. Like, yeah, we didn't get 7,000. Who cares? We got 690. Like, this can't be that big of a deal.
There is no reason to be upset. This is the reality of the situation. Forget Liberation Day. Forget the tariff scenario. You're still up on a year-to-date basis, 17.5%.
And from the lows, it's more than 30, which is really
it's
when
close to 40% from the lows.
Correct. It was a great year. It was a phenomenal year. Like, we cannot be ungrateful for the year that we had in 2025.
Can we be upset that it didn't hit 7,000? Yes, but in a jokingly way. Yes. We can't actually be upset because the market has done well. Now, there have been companies that have trailed, and there are companies that look undervalued, and there look like companies that are upside down with their valuations. That's every market. This is the reality. People thought the sky was falling in March and April. People were headed for the sidelines. People were so worried that Trump was going to destroy the economy, and it was a false narrative. There's been so much sentiment. Every single little thing is overanalyzed and speculated to kingdom come. And people try making a mountain off an anthill. It is insane. It goes back to economics 101 and taking a very simplistic approach. If you have GDP that is expanding, that means that companies are generating more revenue. And if their margins are not compressing, that means that they are either staying the same or expanding, which means that their profitability is increasing. And we are seeing that with the actual earnings on the S&P. So it is hard to go into a bear market when those things are happening. And the ultimate factor that matters is GDP growth. Everything else is a little thing here and there, and when you combine them, they become one big thing. But you had a lot of things working correctly this year, and this is not a year to be upset about, because people who are in S&P 500 index funds just made $17,500 on every 100 grand invested.
What is your response to the people that have had one or two positions in the portfolio? I heard HIMS, SMCI, BMNR. You and me have one of those positions, BMNR, that just really shit the bed. And how are you psychologically dealing with that versus the things that really did well post-Liberation Day, like NVIDIA, for yourself?
Shit happens. I mean, you can't get every trade correctly. You can't get every investment correct. When you look at a portfolio, if you are 100% in one asset, to me, you're a psychopath.
Yeah.
That's just crazy talk. And a lot of people, I hope, have learned a lesson this year that they should have learned in 2022, that even when things go down hard, if you've been dollar cost averaging into an S&P 500 index fund for a long period of time, it is a hedge against yourself. It is a hedge against the market. And if you are going to be concentrated into several positions, you better have a crystal ball that is working 24/7, because it is impossible to know what any CEO is going to announce on a quarterly report, what their earnings are going to be, or how the market is going to treat a company. It's impossible to know. We did not know Palantir was going to do what it did. We didn't know that SoFi or Hoover was going to do what we did. We thought they were undervalued, and we had an investment thesis. They just worked out. Now,
and I'll just say real quick, I agree with you on this whole psychopathic idea, because look, I went full port into two names in 2023, 2024. That was psychopathic. It just happened to work. If it didn't work, who do I have to blame? No one but myself. So like, if you're going to make that level of a risk where something becomes 70, 80% of the portfolio because you're that convinced, it's a bet with you in the market. And sometimes you might be wrong. When you're right, it's amazing. When you're wrong, it's deeply wrong. But realistically, I don't think most people went 100% into HIMS, 100% to BMNR, 100% into SMCI. And if you bought at the top in October, like, unfortunately, that comes down to recognizing, not being able to recognize that when something goes from $10, like IREN, to $80 in October, maybe buying it on the $70 dip isn't really a dip when it's still up 7x year to date. And that's just, and I've made that mistake as well, but that's just lessons that we learn going forward.
And here's another lesson. People need to learn how to take a damn profit. If you're up 10x, maybe you at least take your initial investment out. Just saying.
I don't think that's a horrible idea.
I mean, everybody has to do what's best for them, but finding a 5 and 10x every year or every other year is not realistic. And there are great companies that just are not working right now. That's always going to be the case. And this is the game you play investing with individual stocks. In 22, even Apple got hit by 30, 40%. It was the last one to fall, but even that got taken out. If the largest companies in the world can get hit, guess what? High beta names can get hit. You can't cry over spilled milk, and everybody has to live with their own.
That's got to be your new thing. That's got to be your new thing. You cannot cry over. Are you drinking milk right now? Is that actually milk?
No.
Is that coffee?
No, coffee's right here.
So what is that, water?
Half water, a quarter pomegranate, and a quarter cranberry.
Okay, I like it. I like it. No, but I think this is really important. Like, and you and Matt had a great stream last night just talking about the psychology of recognizing that diversifying and buying something boring is okay, because it's really hard to find the 10x, 20x stock. And we're not in a valuation cycle like we were in 2022 when things were worth $5-10 billion that theoretically you could see them being worth 50 to 100 billion. They're all worth that 50 to 100 billion now. Some of them much more than 100 billion. So the idea that they're going to do that again is not easy. And that's okay.
Yeah, the biggest thing is, if you're going to be in it for all the gains and you don't sell when you get those gains, you have to be ready for all the losses too. Like, it goes both ways. And everybody has to understand that we're not going to call everything correctly. You can't throw a tantrum if the market doesn't go your way. And if you're up a lot, having to pay taxes on profits is a good thing because it means you made money. And I think that just needs to become normalized, and also not going full port into several names. Now, when you're younger, you have the ability to do it because you don't have the bills that you will have when you're 35 or 40, and you probably don't have kids, et cetera, et cetera. So make your mistakes when you're young. But I don't know. I get crazy when I do that stuff.
I think you are so right about this. By the way, Trump just tweeted Amazon's going to invest $50 billion of AI infrastructure for government agencies. This is likely old news, guys. This came out. Yeah, this article was published November 24th. We talked about this on November 24th. He just tweeted the link to the article. So it is not a new $50 billion, but it was bullish and it's still bullish that Amazon is investing that much. I agree with you. I think as we get older, gratitude has to be the most important thing. And in a year when the S&P 500 returned 17%, all of us, including myself, are super spoiled because it's been 3 years since we went through an actual down year. And I don't know if we get one next year, but like that, like on a down year, you would be happy to just like not even lose, not even go up or down, or you would be happy to just be stable because of how gut wrenching it is to see your portfolio go down 20%. So the fact that you might be up 40% this year instead of the 70% you were in October, there's a lot of lessons to learn from that. I've learned a lot of lessons from that, given I was up a lot and I ended the year up and not up as much as I could have been up in October. Those are lessons you learn to become a better investor. But that also means that the high beta that got you to those October highs that most of us were at will also take you down. And that's part of being a growth stock investor if you're going to pick individual stocks, and you just have to navigate it the way it is.
Keep in mind, whenever you would call me live and shit was going wrong, whether it was 22, 23, 24, 25, what was the common theme?
I don't care.
Exactly. Because gaps get filled, dips get bought. Sometimes it takes longer, sometimes it doesn't. But if you zone out and you look at the bigger picture, every downtrend gets purchased. So I just think people need to be diversified into S&P 500 or total market. I prefer S&P 500 for certain reasons. And I think that will help insulate, because it's not fun if you're down 50, 60, 70% in your portfolio.
Not at all.
And if you're only in 3 or 4 high beta names, that can absolutely happen. So I think people need to take a good hard look at their portfolios and realize wealth is not created over a short period of time. And it is very rare that you can make millions or tens of millions of dollars in a couple of years. It is extremely rare. It is not impossible, but it's extremely rare. And when you set yourself up for that type of potential, you're also setting yourself up for that type of treachery also. And sometimes it doesn't work out. So just be careful, everyone.
Yeah, and again, just to bring more gratitude to the conversation, if your portfolio compounded double, triple, quadruple the S&P, which I still think a decent chunk of people here have beat the S&P 500, even with the November, October choppiness, you had to do nothing other than sit back and let Jensen and Peter Beck and Alex Karp and Vlad do their thing. And your portfolio has done pretty well. So it's like, yeah, maybe it's not up 80%, but if it's up 40%, that's pretty damn good for having to do nothing other than swipe a couple buttons and invest in those companies. Like at this point, it's just the psychological effect of like feeling paper rich and then not having those riches. But that doesn't actually mean that the year was bad in any sense of the imagination. So I agree. I think overall it's still been a good year. Jay, thank you for being here. He says, I've been dealing with accelerated dementia with my mom, so I'm grateful to this group to help me get through it. Thanks, Amit and chat people. I also think that's a big part of the year. I mean, at the end of the day, this community hopefully has been a form of escapism for everybody, especially if you're dealing with something in your personal life. And Jay, I hope everything goes well with your mom. Sometimes you need an escape, and sometimes just tuning into people talking about the things that you care about is that form of an escape, which is another benefit to the community.
Yeah, I just want to say, look, I'm not saying don't have conviction. I'm not saying don't invest in individual stocks. I'm just saying that if you're going to invest in individual stocks, you're taking more risk, and there's nothing wrong with it. We all do it. That's why we're here. to collectively come up with ideas and discuss them and flush them out. But at the same time, you have to be ready for the risk. This is not a risk-free game.
Well, that goes to the super chat. Mamba says, okay, I'm listening to this and admit I hear you agreeing, but you changed your life with conviction in a few names. You didn't take initial investment out and wrote it. Risk reward is a real thing. You are 1000% right. But that doesn't mean that taking that same level of risk into, I'll just pick on BM&R is appropriate. Right? Like when you take that risk on a hood at 8 and it ends up working out, and there's a lot of luck involved in that, right? Like there was a lot of luck that also helped that happen, but also it was a fundamentally better story than a BM&R or than whatever name that's down 30, 40% over the past couple months. I mean, a lot of that you have to just give it up to, okay, this 2023 stock that's down 80% going all in on that is different from a brand new crypto digital asset treasury or a stock like HIMS that is up 6x for the year, thinking that it's going to go to 100 because all you see on Twitter is the HIMS, people saying HIMS to 100 as a meme, and it's at 60. It's like, oh, 60 is lower than 100, so I'm going to go all in at 60 because it's going to 100. Like, that's a totally different perspective. And as Steve said, you have to be ready for the drawdown. If hood didn't get to the levels or Palantir didn't get to the levels I thought it would get to, I would be holding the bag. So you got to be ready for the risk or the reward, up or down.
And in all seriousness, there's no guarantee that medium rare can do it again. There's no guarantee. There's no guarantee that anybody can do it again.
I haven't done it again. I thought Grab would be the winner this year. I literally have not done it again yet.
And you know what I hate hearing? I hate hearing if I can just get 8 doubles on 10 grand, how much money I would have. Do you know how freaking hard it is to get 8 goddamn doubles?
It's not easy. I don't know if I'll go the rest of my life ever finding a stock that does what Hood and Palantir did. And with Grab, again, my argument is they should be closer to $10, which is, I think, a very amazing return. That hasn't happened this year. If I put that money into something else, if I'd even just put it into the S&P, that would have done better. So it's like you live and you learn with that stuff, but I don't think you complain about it. You have to just count your blessings and be grateful for it.
And let's address one thing. Bring up a chart of Ethereum for 5 years, please. This is so important when people are talking about BM&R. And I'm going to give everybody some hard medicine right now. Hey, no shit. I mean, you look at those massive drawdowns. Is there any way you can get rid of that 2977 so we can see the top of the most recent? All right, perfect.
One was 4830.
Yeah, so just leave it just like that. So that drawdown isn't even as steep as at least 3 of the previous drawdowns in the past 5 years. Everybody had to have known that Ethereum can do anything at any given time. This could have easily went to 8 grand or 1,000. So I don't think that people getting bent out of shape over BM&R is justified, because you can't invest on an upswing and just assume it's going to keep going up. Look at the data that we have. This thing is a volatile asset. And if you're a trader, I don't know what the hell you're thinking. But if you're a long-term investor, if your investment thesis isn't broken, then let's sit there and do what it does. I mean, I was very clear in the beginning. This is a 5-year hold for me because I have no idea what it's going to do. I just have a thesis on stablecoins because of the Genius Act.
And let's be honest, there was a lot of fundamental analysis on Ethereum that you, Chris, Tanner, and I all tried to do over the past couple months to get to that long-term thesis. Obviously, the reason we went with BM&R over just ETH is because of Tom Lee. And we have to be honest with ourselves here and just like recognize we're all human beings at the end of the day that make the same mistakes that the Buffetts and the Ackmans make as well. Tom Lee is the biggest financial brand in financial media, bar none. He put out a recommendation. A lot of people, even when I didn't own BM, because I didn't own it for the first 3 months before I got into it. I got into it at the end of August. It came out in the beginning of June. For those first 3 months, the chat, everyone had a totally different conception of BM&R, right? Because this whole drawdown thing, everyone was excited, happy. Unfortunately, reality hit, a drawdown happened, glitch, whatever you want to call it. And people, including myself, were left holding the bag after we got excited for it at a time where we probably shouldn't have been excited, but I didn't have a crystal ball and see that Ethereum was going to fall 30%. So the question now becomes, do you hate Tom Lee? Do you blame Tom Lee? Do you just like hate this like figure in financial media that convinced a lot of people? Or do you take accountability You can be upset at him. You can be emotionally annoyed at him. You might not trust his next pick in the future, but that doesn't mean you don't take accountability, including myself. And like, it is what it is. And also at the end of the day, to your point, ETH's down 11% for the year. It's up 300% for the past 5 years. If you do have a long-term thesis, maybe you don't want to be in the stock because you think it's dead money over the next couple of years, but that does not mean that the stock has gone to zero. This is not a company that's gone to zero. This is not an asset that's gone to zero. If anything, we've only seen more and more evidence of the asset getting more valuable. It just hasn't worked in the time frame that Tom said it would work. That's it. That's life.
I gotta tell you, I don't remember people getting this bent out of shape when everybody was down on Palantir.
I agree.
mean, everybody was rallying into it and saying the market is wrong. So,
well, that's a great point, and that's the heart of what you're saying right here. When Palantir was dead in the gutter, everyone was like, "No, the market's just stupid." If you're not saying the market's stupid on BMNR, it's because you probably don't have the massive level of conviction that you have that you had on another stock that was down.
And then you shouldn't have bought it.
Or you just get out if you don't have that. If you're not willing to develop that conviction, which is okay. Like, people make mistakes. And if you think it's a macro play on a crypto cycle, then that's a fair argument. We've talked a lot about that. And if the crypto cycle gets ugly, then BMNR is going to get ugly as well. So you have to come up with that decision on, do you want to hedge? Do you want to stay in it? Do you want to buy some puts, protect your downside? Do you want to slow your DCA? These are all reasonable things to do. But part of being an investor and being responsible for the gains that you get to enjoy and you getting all the credit for those gains, not your mom, not your dad, not your sister, you're the one who bought the stock that got the gains, is also taking the responsibility for when the stock goes down. I mean, when Bill Ackman gets the gains for holding Chipotle for a decade and being up a lot, he also gets a lot of shit for buying Hertz, which he has 20 million shares of, that has done nothing this year. And a lot of his investors are like, why the hell did this guy buy Hertz? I think he bought it at $7. It's at $5.24. But if he has a long-term thesis on it, he's going to stay in Hertz. And if he changes his mind, he's going to sell Hertz. But it's how things work. You either believe or you don't believe, but it doesn't mean you're not allowed to make mistakes in the investing process.
And here's the thing. Nobody knows if this is a mistake or not. It's only a mistake at the moment if you sell and you lose money. This could turn around in a year or two also, just like Palantir did, just like Hood did. So I also think, just like what I was saying last night about not romanticizing 10x gains, I think we need to normalize long-term investing and not expecting every week to make money.
Well, if 2026 is choppy, that normalization of not making, that's going to hit everybody like a brick, including myself. Because if it's
maybe we just need one major flush out at this point.
Look, we had a mini flush out in November, and we both saw how ugly it got. Like, and not just for the chat, but just like Twitter, a lot of other financial creators. I mean, like, everybody. I think everyone realized, holy crap, I am way over levered into high beta if the S&P, if I can't survive a 5% correction on the S&P. And so that means potentially adjust. I mean, I've been talking about hedging for the past couple of weeks because I went through that. It was hell. I did not enjoy it. And so I'm making a different decision going into 2026. And maybe I'll be wrong, but the point is, like, it's part of the process of being an investor. And remembering that it's the fourth year of a bull market. Not the first, not the second, not the third. It's the fourth, which means it gets harder.
I really hope one of these comments is a joke. It's been a month. How long-term do I need to be? Like, I really hope that's a joke. Because if you go to Google and you type in, how long is a typical long-term investment? I'm going to promise you it's not a month.
Let's see. Let's see what Gemini says. How long is a typical long-term investment? Wow. Gemini says 10 to 30 years. That's a little bit more than a month.
Most people that I know would say 3 to 5 years at the minimum. Okay.
1 month and no Lambo.
I don't know what to tell people, except you have to take a long-term mindset, because radical years like we've had or we've seen is not realistic. And you're just going to burn yourself out and get pissed off when you don't replicate those gains. it's not realistic to replicate some of these gains that we've seen. And it's okay to miss out on them, but people should really think about how they're positioned and what their goals are and how to get to their goals in a realistic manner. You know, if you're trying to make $3 million with 10 grand, I got news for everybody. There's not many people that can do that. You know, Chris Camillo did it, but he's one in how many people that did it.
And
Again,
also
easy.
the level of work that he put in. I mean, this guy scrolled TikTok for freaking 18 hours a day to figure out what the next social, like, are you willing to go through that type of work? And that's another question. And it's like, most people don't have that time. They don't care about that, but Chris Camillo is. That's why he does that type of trading. So yeah, everyone has to have their own perspective and their own race that they're running. So I would agree. I'm gonna have an article coming out later today as well, and it'll give some thoughts on 2026, but also thoughts. The first part of the article is literally just my personal philosophy for next year in portfolio management. And I think hopefully it serves as a framework to help other people think of like the philosophy they're going to come up with. But I didn't expect people to be that upset after a day like this, but I guess people really thought we would get into that Santa rally, and it's just not happening. But that's okay.
What if we get a rally in January? Is that Santa rally?
And what if we go down 5% in January? I mean, it's like we're all operating day by day to see how this plays out. And it'd be amazing if we hit 72, 7,300 in January. It would suck if we get back to 65, 6,700. But the point is, everyone has to lock in the way they think about their portfolio for next year and be very ready for it. And I think I think you, Steve, you're always so right about this. I think people are heavily using margin, and it really hurts when a stock goes down if you bought the stock with money you don't have. I think that really, and if you're really hoping for this big rally so that you can get the money to buy this, it's like that's where shit hits the fan. People are heavily playing these weekly options. I saw a stat today of options becoming massive in terms of the average daily volume, 70 million contracts a day. Like, this stuff sometimes has to get flushed out, but it's also okay if you're not getting massive multi-buys.
I'm going to tell everybody a secret, all right? I have never used margin once, ever in my life. I have margin turned on in one account, only so I'm allowed to buy freaking spreads, because even though I have the cash available, they will not let me buy spreads without having margin turned on. Have I been tempted to use margin? No, not really. Because even though it can amplify the gains tremendously, to me, it's not worth the risk. Because if I'm not correct, I don't want to be in a position of owing X amount of money. Now, margin works for some people, sure, but too many people have access to capital through margin that's not their money. And we may really need a huge flush out of the system and get all the bullshit money out of it. Because I got to tell you, and it's not just individuals, it's ETFs and CEFs also.
It's also the hedge funds that potentially margined 100%. Up on a short silver trade that are now having to deal with it, right? So it's like, there's got to be a responsible way to understand using it. But I just don't see how 17% on the S&P is bad.
It's not bad. And once again, look, you think that anybody sitting here or anybody in America doesn't want to have $1 million or several $1 million by 25 or 30? Everybody does. I got news for everybody. It's just not realistic. And what is more realistic is understanding the powers of compounding, understanding that while it may not be realistic to be a millionaire while you're young, almost anybody, if not anybody, can become a millionaire through dedication when they hit 65. And the long-term way that is proven time and time again is investing in the S&P every month. You buy it when it's up, you buy it when it's down, you buy it when it's sideways, you reinvest the dividends, and you let it compound and go up. I mean,
which, by the way, I'm going to talk about that in my article. I'm taking Steve's advice and officially starting to invest in the S&P next year. So I'm going to practice what he's preaching, which is that sometimes that money that could be going into something high beta, I am actively choosing to say, I've had enough high beta for 3 years. I want to protect the high beta gains I've had for 3 years, like a lot of us. And now I'm going to put into something a little bit more safe. Because if we don't have some phenomenal year, then the S&P is hopefully going to be okay.
I mean, I'm looking at comments. No one wants to work 45 years anymore. Like, this shit annoys me.
You guys are going to get Steve riled up.
You guys are going to get me riled up where I want to put my hand through something. Like, I'm going to tell you something. When I was 18 and 19, my ass was at the gym at 4:45 in the morning, and then I was at the course at 6:45 to open up. And that was coming in at 1, 2 in the morning some nights. And in the golf business, you work 40, 45 days in a row without a day off in the summers. And it ain't easy work. Now, a lot of people work 2 and 3 jobs, and not wanting to work, that's crazy talk. That's crazy.
Yeah, man. It gets into a deeper question about like the purpose of life and the type of job you have, the quality, what you're doing. Like, I wasn't happy before I entered into this world that I'm in now, and I'm a lot happier, but it took a lot of trial and error, failing, work ethic to get here. You take an opportunity, you really capitalize on that opportunity. Like, that's such a deeper conversation, but the point is, your larger argument about getting rich quick, it's just not realistic for most people.
I mean,
and that
dude, some of these comments are so crazy, like boomer talk. Guys, I'm not a boomer. Like, I'm not a boomer. Amit will call me and I will tell him what I have going on during the day. Trust me, I have a stressful fucking job. I work a ton. And then when I get home, I write finance articles for Seeking Alpha and now go live. I am doing 3 things. Okay.
Steve works.
I am not just saying this. Like, I legitimately work 90 hours a week. So I don't know what to tell you guys.
And again, it's a deeper conversation, because I don't want to get into the conversation about work ethic and all that stuff, but you either have work ethic or you don't. And if you don't have it, you got to develop it. But it is the single biggest factor. If you're not born with some silver platter and your parents are super rich or trust fund, you've got to fucking work. There's no other way to get there. Like, there's just no, and it feels so good when you work and then you take the levels of risk you need to take because of how hard you're working, and you're rewarded for that. Because now, like, again, just from my personal perspective, I'm able to cover a lot of costs for the family. I'm able to give my mom a really nice birthday present. Like, these are things I wasn't able to do 5 years ago when I was broke, but I worked my ass off for 5 years. And that is what makes me feel so good as just like a son, as a human, as an individual person on this planet, that I can take care of my parents in a better way. But it requires a lot of work. And all of this stuff requires a lot of work. Portfolio management requires a lot of work. Making content requires a lot of work. Having a corporate job and still doing what Steve's doing with Seeking Alpha and YouTube takes a lot of work. I ranted the other day on a Sunday night when I was telling Steve about this. Someone wants to quit their job and start content full time. And I was like, no, like you can't do that. You got to work. You got to work. A lot. The deeper conversation here is a lot of portfolio management is more about getting income coming in so you can put it into the portfolio so that the compounding can easily exacerbate, versus turning 1 to 1,000, but just getting another 1,000 every single month, so that 1,000 becomes 10,000 in 10 months, and then that 10,000 has a better chance to become 20,000. But that requires work, as hard as it sounds.
And I am going to clear something up. I am looking at the tables right now because I actually did not know what I am. I am a millennial, everyone. By the way.
You guys triggered Steve on this. You triggered him.
I know I'm not a boomer. I am a millennial.
What if I want to live off covered calls? Well, covered calls work when you have a decent chunk of shares that you can write the covered calls on. So to get the shares, you got to have the money to then buy the share. It all comes back to what Steve is saying, which it's such a cliche motivational thing. And I'm not that type of guy, but like, it is the truth. And I think Steve can say this as well, because he's 10 years older than me. So he's worked for 10 more years, which means he's made more money for 10 more years. So he's been able to compound that for 10 more years. And it happens when it happens. But Steve, were you crying that you weren't a millionaire at 25, or were you just working to become a millionaire eventually?
That wasn't even on my radar to become a millionaire at 25. You don't even want to know what I was doing at 25.
What were you doing at 25, Steve?
I will tell you this. I wasn't sitting on YouTube freaking watching videos and stuff. I was freaking, if I was home for 10 minutes throughout the day, other than going to sleep, that was a lot.
So you were really living life basically in your 20s.
I mean,
while working at the same time.
Listen, if I could go back, if people ask me, would you live your life the same way again? In some respects, yes, but in some respects, no. I mean, I know that I did not have the mindset that I have now when I was that age. And I don't think I could have ever forced myself to have that mindset. I was just wired differently. I needed to be outside. Like there are some people that just can't sit still. Like I always need to be doing something. I was always out. I was always doing stuff. Look, for me, it happened a little bit later in life, which is fine. But becoming a millionaire at 25 was not even on my radar.
By the way, when Steve and I had dinner with Triple V, he told us a story. Obviously, he's done very well for himself now. He's a couple years older than Steve, but he came from Russia and literally.
This is an amazing story.
He came from Russia, could not speak a lick of English, and he's walking around. I think this was either New York. I think it was
New York.
It was New York. He was walking into random stores. Could be a coffee shop, could be a bookstore, anything. This was back in the 90s. He was knocking on their door, and he was saying, work, I want work. That's the only 3 words I want work. And now the guy is, at a different level of life. And it's like, it's not like he's the only one who could do that. Everyone, if you've already been born in America, you have that upper hand. You already have more technology than he had in the 90s. Like everyone has the capacity to use resources to work harder. But it is.
Look, if he can do it, anybody can do it. Now, maybe not to the degree and the success that he had, but not knowing the language, having the deck stacked against you, and all you have is a work ethic, and he did unbelievable for himself, anybody can do it. I mean, there's a very famous Rogan podcast where he talks about in order to be happy, maybe that's not the right terms to use, but he was talking about financial freedom and working for yourself. And he's like, yeah, after you get done with your regular job, go home and grind out on something for 2 hours instead of watching TV or playing video games, and work on a side hustle, keep doing it, and keep building it into something so eventually that can replace your day-to-day income. People don't want to grind on side hustles.
Yeah, I mean, like the reason I even had the money to invest in Palantir is because of a variety of different side hustles plus the actual consulting job I had, which at the time to me felt like it was just a side hustle. It just turned into like my main hustle. But that was also a lot of work. I've told the story so many times, but a lot of driving up and down New Jersey 5 days a week, working on Saturdays, but every incremental dollar going into this stock that I'm down 80% on, that I have no idea why I'm down 80% on in 2022. But that's the journey. That's the journey.
So I'm going to disprove something real quick. Bad idea. Just focus on your career and try to advance in your career. You have to understand there's a lot of limitations in careers. And you may not get promotions as freely as you want them. Now, I'm not saying do not take your job seriously and do not try to succeed. But when you're done with work at night, not working on a side hustle and watching TV, if you are like, there is nothing wrong with going home after work and then checking emails and still working. But instead of taking downtime to decompress, work on a side hustle. Try to understand a stock or something. That can be a side hustle. There are other things that you can do with your time that are productive than watching TV or playing video games. And I'm sorry, but that is the reality. If you want to get ahead, you always have to be working.
Someone says, getting a little tired of this how I work hard spiel. Plenty of folks bust their asses harder than you guys.
Okay, cool.
Honestly, I have nothing to say, but I laugh at those types of comments because I've worked my ass off for the past 5. No one can take that away from me. So people can say whatever the hell they want. I know how hard I work. That's the one thing you can't take away from me. Whether you think it's hard work or not, I work my fucking ass off. And I know Steve does as well. If you've got that,
I only went to graduate school while working a full-time job, and right now work a full-time job that's pretty damn stressful with 2 legit side hustles that bring in real money. And the Seeking Alpha stuff is freaking hard as hell. Okay. I know people with CPAs that can't get shit published on Seeking Alpha. So, yeah, do people work harder than me? Sure. Not many.
Yeah, again, hard is also very subjective. Like, there's different levels to the types of work. Obviously, physical labor.
I mean, look, you do physical labor and you're in construction. Yeah, you have a physical job that is physically strenuous, and that is more physically demanding than anything I do, 100%.
But and so I wonder if someone would say, oh, that person who works construction works harder than Jensen Huang. Because Jensen doesn't have to do that type of physical stuff, but Jensen's working pretty damn hard. It's just a different type of hard. But that doesn't mean the hard work isn't there. His hard work is valued at literally millions of dollars an hour. The construction worker's hard work might be valued at $30, $40 an hour. There's a difference in the quality of work, but it does not mean that one is harder than the other. They're both working their ass off.
And look, there's a lot of different professions that people are picking up a ton of shifts and working hard. And that, look, I got news for everybody. Hard work is the most important thing. You got to get into that mentality, because you pick up additional shifts, maybe that's additional money that you can put into the market and do something. But nothing comes easy and nothing's free. I mean, everything is blood, sweat, and tears.
Okay, having said that, let's give away some money. Didn't mean to turn this into that, but hopefully the conversation was somewhat, and it's definitely not a conversation meant to lecture. You guys know I hate that shit. I hate that shit so much. But I mean, if the conversation is that we're not grateful for S&P 17%, like
it's a great year. The freaking average over the past however many years is 10.5%. You have an above average year. It's a great year.
Yeah. Okay, so giveaway rules. We do have a little bit of a change from what I said in the morning. So, and people are not going to be happy with this, but again, there's just not enough I can do on this. So I wanted to use Kahoot. I wanted to use a third-party platform that would allow everyone to log in, sign up, and then type their answers in, and we get a full leaderboard. Didn't realize Kahoot only allows 50 people. So I was like, okay, let me pay for the upgraded version. The upgraded version only allows 200 people. Let me pay for the mega upgrade. The mega upgraded version only allows 500 people. I was like, okay, what are Kahoot alternatives? I cannot find a single alternative that actually allows thousands of people to join into something. And the only one I did find allows 100,000 people to join, but they cost $950 a month, which I don't think makes sense to pay. You have to pay an annual cost. It's like, oh, I'm giving away 1,000. I'm spending 9,000. That might not be the best idea here. So we're going to have to do it through YouTube, as always. Again, I'm doing this in the spirit of giving, just because I feel like it's important to give back. And I'm just so grateful that people are here every day. So it will once again be in the chat, the fastest. It's not members only, not subscribers only. If you're in the chat, you have a chance to answer. And I'm using this iPad right here. Some of you guys will probably type it first, and it will not show up on my iPad. There is nothing I can do. And if anyone has a better idea on how to do these giveaways, because the way I've seen other YouTubers do it is they say leave a comment under a real video, and then they take the number of comments and they randomize it on a number generator, and then they just go to that number comment, which could be 1 out of like 15,000. And that's how they choose to make it. But when you do it live, you just can't do it without some structure like this. So this is the way we're going to do it, at least for now. In the future, we'll probably Twitch is better for giveaways, but YouTube's got to realize they have a growing live audience, and they have not optimized the way that Twitch has. But Twitch sucks for a lot of other reasons. So I wish YouTube, like even polls in the chat, there's so many things YouTube could do to make this stuff better. But for now, we're just going to do it through the iPad. Okay, so 10 questions, $100 each. I will write your name down as soon as I see you are the winner. Please email amit@akcoms.com with a screenshot of your YouTube account and your name, just to validate that it's you. And do it like tonight so that I can give this away tomorrow. And I think we'll just do it through Amazon gift cards. I think that's probably easy. If you really want to PayPal, let me know. But most likely it'll be through Amazon gift cards. And we'll do $100 for winner. Now, these questions are pretty simple. I don't think these questions are hard. They weren't meant to be hard. So yes, you can ChatGPT them. But again, this is the fastest person to put it in the chat. And so whoever types it the quickest will be the winner. that's how we're going to do this. But the questions, I mean, realistically, they shouldn't be that hard. All right, here we go. Let's get into it. I will pin the question. And it was multiple choice, but given they're relatively easy, I don't think it needs to be multiple choice. This one is super easy. We'll start off with number 1. Here we go. I'm looking. Okay, so the way to answer this, okay, I'll just add some of that caveat so no one gets confused. I'm looking for 3 letters in this answer. All right, 3 letters. 3, 2, 1. Which ETF tracks the Russell 2000? Which ETF tracks the Russell 2000? Raven Terp 01. You got it.
Hold on.
Actually, no, Raven Terp, you didn't get it. Someone came in right before you. I'm sorry. This stuff is going to happen. It is what it is.
Yeah, I'm seeing Casper.
Casper is the one. Casper 67. Casper 670. Okay, good. So Steve can validate with me. Raven, I'm sorry. You were just underneath him. Casper 6787. You are the winner. It is IWN small caps. So good. Steve can validate it too, as he's with me. And I'm using the YouTube chat, Steve. Casper 6787. Of course, you have the 67 there. Please email, and we will get you in for the first question. Yeah, some of this stuff is like nanoseconds, so you got to be really quick. But also, it's not that hard. So if you have the answer immediately, it's just a question of how fast can you type it. All right, that was number 1. Casper, you got $100. Please make sure to email tonight. Number 2. Let's do. Oh, this is a good one. Okay, let's do it a little bit harder. But this is the question. I'm looking for 1, 2, 3, 4, 5, 6. I'm looking for a 6-letter answer here. It could be fully caps or not caps. 6-letter answer here. Which metric represents a company's profitability before financing and accounting effects? Which financial metric represents Momo Fighter 3211? You got it. EBITDA.
That's what I'm seeing.
EBITDA. Momo Fighter 3211. You got it. It is EBITDA. Someone said Amazon. That is 6 letters. All right, EBITDA. Momo Fighter 3211. You are second. Please make sure to email. And you just won $100. All right. Number 3. Bro got it before the question popped out. Well, yeah, you might have. But that was like literally right when it was there. All right. So number 3. This question is relatively simple. I think it should be decent. Shouldn't be too hard. This one is going to be a 4-letter answer. Which ETF tracks U.S. real estate investment trusts? Which ETF tracks U.S. real estate investment trust? This is our 3rd one. See, a lot of you that are spamming these 4-letter tickers, you didn't wait for the question. It is not REIT. That was not the question. The question was which ETF tracks real estate investment trusts. Oh, it looks like this was a hard one. Zero Dubs XLRE. That is correct. Or sorry, O Dubs, not Zero Dubs. O Dubs, ODUBSS XLRE. That is correct. That tracks the real estate investment trusts as per the S&P 500. So ODUBSS XLRE. That is the answer for that one. And let me just confirm you are first. Yeah, I mean, there's a lot of people that typed in REIT, R-E-I-T. But that was not exactly the question. O-Dubs, you have won $100. Please make sure to email by tonight. All right, number 4. Let's do this one. Let's see. Well, okay, this is not a bad one. I think most people will get it, but let me just confirm to make sure it is correct. Okay, so I just have to check one chart to make sure this is correct. Okay, so question for this one. All right, here we go. It's a ticker symbol. Looking for a ticker symbol. Very simply, let me write out the question. Very simply, this is number 4, right? It's number 4. Yes, it's number 4. Which stock has, looking for a ticker here, which stock has returned the most this year for the S&P 500? Which stock has returned the most this year for the S&P 500?
I gotta tell you, the amount of freaking how quickly people answer is amazing.
It is pretty quick. Well, this is why Kahoot wouldn't work, because I knew there would be way more people. They only allowed 100. Guys, it's not Hood or NVIDIA. What are we doing here? It's not Hood or NVIDIA. No one's got it yet. Wow. It's not Palantir. It's not Oklo. It's not Micron. I guess this was a hard one. I thought this was easy. For the people that think they have it, you are, let me make sure I'm not getting it right. No, you're spelling it wrong. You are spelling it wrong. There's a couple people that have it, but you're spelling it wrong. You're spelling one of the letters wrong. Oh, I think I found it. Let me confirm. Before I say your name, let me confirm. Is there anyone ahead of you? There is no one ahead of you. Okay. The winner goes to Dip Liglo. Dip Liglo. DIPLIGLO. It's SanDisk. SNDK. 567% this year. SanDisk. We talked about this 2 days ago. Like, I was surprised. It's these memory companies. It's not Micron though, but SanDisk, Western Digital. These are the ones. So Dip Liglo, you are the winner for this one. Again, for those that are saying it's first, guys, there's not much I can do here. This is the best I can do. I'm double checking it twice. Not all of YouTube's going to be synced, but this is the best I can do right here. So Dip Liglo, you have got it. It's Ligma. All right, that was number 4. Okay, number 5, almost 50% of the way through. Then we'll get back to talking markets with Mr. Steve. Let's do. This is actually a good one, I think. Yeah, this is a good one. Problem is there could be 2 answers here. I don't want there to be 2 answers here. Let's do this one. Okay, so you guys are just spamming random things. This one, 10 shares of Hood for the next answer. Dude, I wish we could give away stocks. It's just having to buy them specifically is really hard. Okay, let's do this one. All right, cool. So this one, I'm looking for 4 letters. I'm looking for 4 letters. Here we go. This is number 5. It should also be pretty damn simple. I don't think it should be that hard. All right, here we go. Which ETF absorbed the largest net Bitcoin inflows during 2025? This should be so easy. This should be so freaking easy. Bulls here. You got it. BOELS_here. IBIT. IBIT is the answer. IBIT. This is BlackRock's Bitcoin ETF. bulls here. You got the answer. And that is number 5. It's outpicked. All right, cool. Number 5. Number 6. Oh, this one's actually, I think, a decent one. Okay, this one's also pretty easy. It should not be hard. It's not about 2025. It's more general investing. Okay, this one should be super easy, which is why I'm going to look to see if you spell it right. If you spell it wrong, I'm not going to give it to you. You got to spell it right because it's too simple to get wrong. So I'll be looking for the exact spelling on this. Okay. Number 6 is, which option term from the Greeks is used to describe time decay?
I think we got it.
Let me confirm. Okay. Brennan, is that what you have? Brennan O'Brien? Brennan O'Brien.
Stop Hunter.
You have Stop Hunter? It's theta. That's the answer. THETA.
Yeah, Stop Hunter 69 is what I'm showing.
Okay, let me see. Brennan, I have you. Is Stop Hunter ahead of you? Oh, for me, it's Brennan. For me, it is Brennan.
Yours is saying Brennan, then Stop Hunter?
Brennan? No, I don't see. Where the hell is he Stop Hunter?
Wait,
are you using StreamYard or YouTube?
I'm using StreamYard.
Oh, StreamYard. No, your StreamYard has a delay. Doesn't count. StreamYard has a massive delay. That's why I'm using the iPad. Gotcha. Brennan O'Brien, theta. Theta is the answer. Okay, Brennan, you are the 6th winner. So there you go. Theta, time decay, and options. If you're an option seller, theta is usually on your side. And that is what you are looking to collect as an option seller. Okay, here we go. This is the next one. I'm looking for 3 letters. This is number 8, right? This is number 8 or number 7? I'm pretty sure this is number... I'm pretty sure this is number 8. Okay, this is number 8. All right, here we go. Which volatility product consistently spikes before equities sell off in 2025? 2025, but also historically. That was number 7? Okay, cool. BL000. Wow, that was quick. VIX. The answer is the VIX. And look, even if you guessed it when I said 3-word letter, a lot of people are guessing a lot of things that are not 3-word letters that were VIX. So it is what it is. If you guessed it for that, then you guessed it for that. BL000. The answer is VIX. And that is the correct one. You won $100. Please make sure to email me. 1, 2, 3, 4, 5, 6, 7. Okay, that was 7. So we have 3 more. 8, 9, 10. All right, we got 3 more. 3 more. The answer on that was VIX. Steve, if you have a fun one that you want to do, you can text me it.
No, keep going.
On your side. Okay. All right, next one. This one I think is relatively good. Yeah, I mean, I think this one should be a relatively easy one. I don't think this is too hard. This one should be it. All right, here we go. Looking for one stock. It could be the ticker. It could be the entire stock name. Very simply, which stock had the highest average daily trading volume in U.S. markets in 2025? This is number 8. This one's an easy one. Mamba mentality. You got it. NVIDIA. Mamba mentality, NVIDIA. Mamba mentality. Thank you for winning. I can finally pay you back for all these super chats you've sent over the past couple of years. So this is my way of paying you back. Thank you, Mamba mentality. NVIDIA is the answer. They are the largest through US dollar trading volumes. And it makes sense because they have the largest amount of volume and their stock prices in that triple-digit range. The answer is NVIDIA. Okay, that was number 8. We got 2 more. Oh, this is actually a good. We've talked about this. We have talked about. I've looked at multiple charts about this. I am looking for. This is one. Well, I'll know if you're right if you have the right answer. It's just simple. I'll know if you're right if you have the right answer. Which type of options expiration dominated total U.S. options volumes in 2025? Which options expiration type dominated total U.S. option volumes in 2025? We've talked about this many times. NIHAR KALSE SACAR 3439 0 DTE. That is correct. 0 DTE. You have got it correct. NIHAR. I'm sorry, I'm saying your name so wrong. It's probably an Indian name. Completely disrespecting my ancestors here, but NIHAR SACAR 3439. You got it right. 0 DTE. That is the answer. Again, if you had it before him, I'm sorry, guys. Like, this is the best I can do. I will hopefully figure out a way in the future, but with this many people, this is like the best way I can do it. All right. We got 2 more. 2 more left. 2 more left, and then we are done. Or this is 1 more left, right? Guys, that was the number 9. 1 more, right? Right, Steve? 1?
I think there's 1 more.
I'm pretty sure it's 1 more. Yeah, it's definitely 1 more. 1 more. Okay, cool. 1, 2, 3, 4, 5, 6, 7, 8. And then someone just won before. Yeah, 1 more. This is 9. This is going to be 10. 1, 2, 3, 4, 5, 6, 7, 8. Yep, 1 more. All right. So last one. Guys, please do not email me the screenshot of you being right. There's nothing I can do about it. I'm sorry. So for the emails that I'm getting right now saying, hey, Amit, maybe it showed differently for you, but my screen on YouTube showed it right. I am sorry. There is nothing I can do. There's nothing I can do. The most I can do is just do more giveaways to get more chances, but I cannot respond to that email because I've already said there's a winner. I'm sorry, but there's like quite literally nothing I can do. Okay, so last one. I feel like this should be a fun one. I feel like this should be one about Steve, to be honest.
Don't do that.
We should do something for Steve. I can't do something as simple as what does Steve like to drink? We're going to get milk all in the chat. It's got to be something fun here. What do we say about Steve? Actually, no. I think I have the perfect one for Steve. This is like if you're an OG Steve watcher, you'll know. So, no, I have the perfect one. This is a hard one, too, so it'll take time. 1, 2, 3, 4. This is actually a hard one. I don't think you're going to easily get this. You got to be watching Steve and listening to him to know this shit. Okay, here we go. Here's the question, okay? There are 4 parts to this question. You need to get all 4 parts right to win.
Jesus.
The answer to this. But that means it'll be hard and it'll take long for everyone to do it. Steve has written many articles about many stocks. He has also talked in depth about many stocks. Here's the question. Separate your answer with a comma. If you spam them one by one, it will not count. So separate them with a comma inside of one answer. What 4 stocks, actually, sorry, 3. Make it 3. So make it a little bit easier for everybody. What 3 stocks has Steve talked about or written articles about that he has not actually bought in his own portfolio? Put it in the chat. What 3 stocks has he talked about, written articles about, that didn't make it to his portfolio, but we've both referenced those 3 stocks many times because he was right on them, but they just didn't end up making it into the portfolio? Steve, I'm going to text you the answer real quick.
Yeah.
You probably know. Okay, cool. All right, so I got to look long and hard for this. These are 3 that have to be very specific. I don't think people are going to easily get this. I mean, if you really watch Steve heavy, you'll get this. It's not Costco.
Hold on a minute.
If it's wrong, then you can correct me because no one's won yet. I'll go to the answers. Or maybe you can give me something that gives more of a hint. Okay, we'll make this, because no one has the answer yet, we'll make one of the stocks Steve did own and then he sold it. So he did not.
I think this is going to be really, I don't know if anybody's going to get this or not.
This is good. This is good. All right, so the question is, what are the 3 names that Steve has talked about or written articles about, 3 tickers that he does not own? And one hint, which is actually a really good hint. He has owned one of them, but he sold it. And that one name has done very well this year. Like if you watch Steve, you definitely know this name. So one of the 3 names he did own before, but he ended up selling it, did not participate in the upside this year. I'll even give you a bigger hint. That stock that he once owned year to date is up 84%. Again, I really think that's to make it easier. No one has it yet. You guys are doing hood, pound tier. That's not it. That's not it.
Somebody got one of them.
There's a bunch of people that got one of them, but I'm talking about all 3. I'm talking about all 3. A lot of you guys are getting the one that I just gave the easiest hint for. That's why this is good, though, because it's not easy for people to get this immediately.
I think this is almost an impossible thing.
No, it can't be that impossible, bro.
I think it's going to be impossible.
Okay, we'll give the one hint. One of those is Intel. One of those is Intel. So you guys do not type an answer that doesn't have Intel now. If you do, it makes no sense. One of them is Intel. All right, so that's obvious. Intel was the one he owned and then he sold. There's 2 more. I guess we got to give hints for those other 2.
I think you're going to have to give a hint about what sector one of them is in and what one of them is used for potentially. I'm telling you, we'll be here till 10 o'clock. People are not going to get that combo.
Okay. One of them, I'm going to be so obvious with this, but one of them women tend to use more often than not. Okay. And the other one is in the software space. So one of them is Intel.
You no longer have to be physical to execute documents.
One of them is rooted in women's beauty. I'm so giving it away. And then the other one, and then you gave away the other one easily. The other one, you don't have to be there physically to do it. Okay, we should now get really close.
Oh, we got one person.
Text me their username real quick.
Hold on.
If you have all 3. I'm going slowly now and seeing it.
I thought we did. Hold on.
I think that second one is still really hard for people.
Dr.
No, text it to me.
Oh, yeah.
Okay, I have. The lowercase d in the beginning.
That's what I'm
let me just
saying.
Let me just see. I text you all caps, but that guy.
Hold on.
I'm gonna make sure no one above him has it. Let me text you the exact one. This is a hard one, but this is a good one. That guy or girl.
Yes, I believe so.
Yep.
Yeah.
That's him. There's no one about. Okay, Defuse R1. It was Intel, ELF, and DocuSign. Intel, ELF, and DocuSign. Defuse R1. Everyone's getting it now. But Intel, ELF, and DocuSign. So Intel, Steve has talked about Intel so many times. By the way, I'm kind of thinking of dude, Trump and NVIDIA own it. Like, are we really going to let Intel not have a good 2026? I'm just thinking maybe Intel just on that sheer momentum is a trade. ELF, Steve talked about it when it was at 50 on Seeking Alpha. And then DocuSign, Steve talked about it in 2024 when it was much lower than it is today. He just didn't end up buying those 2. DocuSign is indeed a stock. The ticker symbol is DOCU. Not had the best year this year, but it was better or was much cheaper when Steve talked about it. It's down 23% this year. All right, Defuse R1. Please make sure to email me. And you are the 10th one.
I'm back in 1 sec.
All right. All right, guys. There you go. Those were it. We'll do more giveaways in the future. Again, I gotta, if someone has an idea on how to do this in a more strategic way, let me know. I feel like we would have to build something in a custom way to get this shit done. Otherwise, it's like, I don't know if that's easy. So if you won, again, put it in the chat. And just let me know, and give me your screenshot of the actual comment itself. Google Forms. Could Google Form? The problem is this is about speed. I tried with Kahoot, bro. Apparently, I made it this morning and I was all ready to go, and then they were like, "There's only 50 people." And I was like, "Okay, let me upgrade 200 people." I'm like, "Okay, this is not going to work. It's just not." And I'm sorry, I'm just not making a Discord, dude. Discord cannot manage that much in Discord. It needs to be something simpler that makes this happen. All right, cool. That's what we got. That was the giveaway. Again, just an appreciation for me. We'll do a lot more giveaways in the future, but deeply, deeply appreciate everyone being here, everyone taking their time to watch the channel, everyone that enjoys Mr. Steve being on the channel, which Steven Fiorillo has hit 12,000 subs in what? In 2 months? Not even 2 months. He started end of early November.
2.5 months, medium rare.
Dude,
I gotta say something. I am so freaking impressed. Amit comes into the restaurant yesterday. So we're getting medium rare porterhouse.
Dude, but no one believed it. People thought like it was just so. They thought
you legitimately came in. You're like, medium rare.
They're saying I'm eating raw worms, bro. That's what they're saying.
No, that's a thing of beauty.
That's what I believe. It's a thing of beauty.
That's a thing of beauty.
I'm a changed man. That's beautiful now. That's not disgusting.
Beautiful. Gotta get that color on there.
It's how you eat a steak, baby. Whoever doesn't eat medium rare got some issues. Okay.
In all seriousness, how good was that place?
It's great. It was actually great. It was phenomenal. Like, it was actually really freaking good. It was really freaking good. Oh, I know. Okay, Mamba just DM'd me. Dude, I didn't know you were Mamba. I know who Mamba. I had no idea who the Mamba mentality guy. Now I know who you are. Okay, I got you. Don't worry about the email. I got you on DMs. Oh, dude, I thought you were someone different. All right, awesome. Awesome stuff. All right, so let's get back to markets here. Talked about the end of the year. We talked about S&P. Talked about being grateful for returns. I mean, we've talked about first of all, let's talk about what are we going to talk about tomorrow on the New Year's Eve stream. What is the we're going to do it only on Steve's channel because our chats are basically the same. So we're just going to do it on one channel. So there's one chat. What should people expect tomorrow night, Steve?
Well, I think they should expect several things. I think we are going to talk about what we see for 2026, what themes we think are going to work, how we're trying to position, what can go wrong, some underlooked companies that can break out. I think that we should get into all that stuff, have some predictions for the year with where we think the market is going to close, which company is going to generate the most returns from the top 50 or even the entire S&P, and come up with a bunch of predictions and then just have fun. And the idea is that we are going to be live for everybody who is not going out tomorrow night.
Yeah. When's the last time you went and had real fun on New Year's Eve? Like, was it like when you were much younger?
Like real fun?
Like got drunk, Atlantic City, crazy shit on New Year's
Dude,
Eve.
I haven't been drunk in so long.
So it's been a minute for you, New Year's Eve.
Like you know how John Goodman in The Gambler says, "I drink, but I haven't been drunk since Reagan." Yeah.
I don't remember that part, but I watched The Gambler last month. So I do know the movie you're talking about.
So I don't know. It's got to be at least 10, 15 years since I was drunk.
Okay, cool. So for the people that aren't getting drunk tomorrow night, or even if you are getting drunk, you can watch the stream.
And buzzed is much different than freaking drunk.
Yes, that's a fair point. That's a fair point.
You know, like, have I been a little buzzed at the casino? Yeah, but that's not drunk.
Yeah, that is fair. I think if you guys have any topics in the chat, you can put in the chat on like predictions or awards for 2025. But yeah, I think it's just gonna be a good time. We'll chill. Matt said he might make it. If he doesn't, it'll be me and Steve. You'll probably
Matt may make it, and we'll see. It's going to be a fun thing. Probably going to go at like 8 o'clock or so, that area. I am going to have a drink tomorrow. It'll either be Johnny Blue or I may open up a bottle of wine.
Have you seen Elysium yet? Or no?
I have no idea what Elysium is.
Siege sends me $20.
I've never even heard of this.
It's like a 2013 robot film. Yes, I watched The Gambler instead of Elysium. I'm sorry, Siege. This was over Thanksgiving, actually. This was a while ago. We've got to watch this freaking movie, but I will watch it, Siege. When I'm on my hold on, Steve. Did you try Grey's Anatomy yet?
It'll get done before tomorrow.
Okay, so I'm on season 2.
I told you I was going to watch it. It will get done before tomorrow.
I'm almost done with season 2.
Okay, did you watch Power?
It'll get done before tomorrow.
Exactly, it'll get done before tomorrow. So we have something else to talk about. The real question is, Tanner and I are refining and presenting our top 25 movies tonight. The question is, from Tanner and myself, we were talking before, is there any way that if both of us have a movie on our list, that there's even a chance you watch it in 2026?
Me?
Yeah.
Dude, not until I'm done with Grey's Anatomy.
You're going for all 20 seasons?
No, I'm going for at least 10 because I know after season 10 it kind of falls off.
I was going to say, if you do all 20 seasons, I will throw a party for you.
I think I'll be done for the whole year if I do all 20, or at least half of the year.
Jesus.
Dude, it's just something you can keep in the background. It's something, and look, I'm not going to lie. Am I there staring at all 42 minutes? No. Netflix has this nice little 10-second button. There's sometimes two characters are talking. I don't really give a fuck about what they're talking about. Okay, get to the part I like. Like, that's how I watch shows. And I speed watch. They have speed reading? I speed watch the shows. But I still get the gist of what I want to get out of it. It's effectively consuming the content. So... Dude, everyone's saying after season 10 it's bad. All right, so then that's it. I'll watch till season 10. Update on the stock draft. We have until June 2026, but this is the update for now. Matt is firmly in the lead at 31.9%. He's down on.
I have not updated now. Now did a split, so I need to
update.
That.
You did.
I did not.
Oh no! Can you do that right now? Can you do that?
I'd have to log in. Just give me a moment.
Okay. Yeah. So we'll look at Tanner in a second. But do you have one of those splits as well, Steve? You changed Netflix. Okay. So Matt's at 32%. He's down on an oil and gas play. He's down on Bros. He's down on Oscar. But everything else, he's good. So I think Matt has really navigated the volatility of the past 6 months pretty well. And he's got a lot of growth with Rocket Lab, SoFi, and ASTS. And then he's got a lot of stuff that was just normal, but it didn't hurt him, even if it didn't go up like crazy. For me, Palantir Hood, Tesla, AMD, JP Morgan, Nebius, Grab, Apple, and Visa are in the green. The one thing that has destroyed my portfolio is Duolingo. I have 6 months for this thing to not be down 62%. That would be nice. I think if I didn't have this, I'd probably be up there with Matt, but that is the biggest stinker that is for me. Steve's is very interesting. He's up 140 on Micron, and he's up 40 on Broadcom. He's flat on Salesforce, flat on Microsoft. The things that got him were MicroStrategy. Unfortunately, the crypto play didn't work out. HIMS, that one just didn't work out. CrowdStrike, he's basically flat. PayPal didn't work out. Should be safe for next year. And then Meta's at 4. Meta should have worked out more. That should be a catch up next year. So this one just had a few thematics that didn't end up playing out. And then you have Chris, who's up 7.2. Chris is up 10% on UNH. He crushed it on Google, 77. Crushed it on Marvell, 24. Got hit on Axon. Multiple was just too high on that. Got hit on Elf with the tariff stuff, down 40%. Oracle, the fact that he's only down 5% is actually amazing because Oracle got hit pretty bad. Cisco, he's up 20%. Steve's been yelling about Cisco for 2 years. That one's been incredible. Eli Lilly, he's up 34%. Healthcare rotation was great. Novo, he's down 30%. So maybe that's a catch-up play for next year. And then Take-Two is just flat. Well, it's up 8%, but hasn't moved too crazy.
So I have mine open. Let's go to Tanner. What is the price we need to put for now when it did the split? What did it turn into?
Divide by 10.
Okay.
So ServiceNow stock at the moment.
So are we doing the when we bought it divided by 10?
Yeah. So he bought it on what day? He bought it at freaking
It was
June
1,005. It was 1,005.13. So we're putting $100.51. His is updated.
No, wait. He bought it on June 16th?
Yeah, I have the closing price from it. It was 1,005.13.
No, but I'm looking at 196, 197, which would have had to been 1,900. Oh, was it 5 for 1? Hold on.
No, it had to have been 10 for 1.
No, it was 5 for 1, Steve. Yeah,
It's
that's,
5
sorry.
for 1.
5 for 1. Yeah, it's 5 for 1.
Hold on.
5 for 1.
All right, so 201.03 is his new price. So that's down 23.28% for the year.
Okay, so Tanner's at 18. So
Yeah.
Tanner, NVIDIA crushed it 30%, Nubank crushed it 36%, ServiceNow down 20, Mercado Libre down 17, Shopify crushed it up 51. Trade Desk, that one just didn't end up working out, down 45. ASML crushed it 40%, AppLovin really crushed it 87. Coinbase, not too bad, down 11. Again, that's his crypto exposure. And then TSM crushed it up 40. So if Tanner just didn't have TTD, I think he would be doing really well. That's the one that's hurting. But he's up 18% as well.
Be interesting to see how the second half of this turns out.
Okay, so let's talk our portfolios. If I had to make any choice, I would get rid of Duolingo for literally anything. For you, is there any major change you would make if you could do it again?
I mean, if I could do it again, I would. The only reason I took HIMS is because I thought I could deal it to somebody, and you did make me an offer, but I didn't want to take it, and I should have, because it would have been a great deal for me and a bad deal for you. I think I would have done pretty much everything the same, to be honest with you, though, because everybody was picking, so things I wanted, people had already picked. So I think with what was available, I don't think I would have done much differently, because I thought that Bitcoin had the potential to go up. And if it did, I thought that MSTR could outperform a lot of stuff people were picking. And the reality is that it can still do something in the next 6 months. So I think it probably would have been similar.
Netflix, I don't think you expected this whole Warner Brothers thing, because that completely...
No, I mean, look, I thought Netflix would give me 10% or so.
Yeah. And then PayPal, I think, can catch up next year, and that can recover. Salesforce, I mean, you're pretty bullish on that going into next year as well.
I'm telling you, it's the dark horse AI catch-up trade. When you look at the actual numbers behind it, and I went through it with Matt. Like, Matt disagrees with me, which is fine. Everybody can disagree. Let's see what happens next year. They have a lot of AI potential next year, and I think it's a name that is very inexpensive for being able to put up close to $13 billion in free cash flow.
Agreed. There was one moment from the freaking stock draft that is hilarious. Oh, here it is. This shit was hilarious. This is shout out to the Currently Right Now channel. He got this loaded up. For those that didn't see it, I'll put the link in the chat. But this, if you missed it early in the year, was a fun one.
List is crazy to me.
I don't need SMCI's margins are trash. Micron is cool.
I'm not taking it. But you guys can have it. But
Spotify's at all-time highs, bro. That Spotify.
I took 2 things at all-time highs.
yeah, I took some things at all-time highs.
That's because you have a bad list, Steven.
My list is solid.
He called you Steven.
That's how you disrespect someone. It's like,
Short-term investing at all. But I love all these names.
You have enough chips. You have software. You have Amazon in Latin America. That's great. Shopify is expensive, but you got.
Yeah, but do I even want to diversify or like? Because there's no. Here's the thing with this game,
Dude, just shut up and just pick, man. Christ.
Yes,
All these fucking reasoning. I'm just sitting here. I'm like,
Chris
yo,
has
get this
been
fucking
so
game on.
quiet for so long. He just throws
I'll
a
do
all this
ball
fucking
Yes,
like,
of the
bro,
fucking
you're picking a
top
stock
shelf.
with magic money, bro. This is not affecting your real life. Just pick a goddamn stock and call it a day.
Hold on, but this
It's
shows how
$1,000.
passionate we are. This shows how passionate we are. We want
it's
to-
$1,000, and here. All right, we'll.
Okay.
this was so funny, bro. Because like, first, I think Chris was just like not feeling the best that night, and we thought we were ready to go for 5 hours, and I think Chris thought it was going to be done in like 30 minutes, and we're just going forward, taking our time, and Chris is like, "Bro, it's a draft. Like, make a pick."
Has anybody not done fantasy football? I mean,
I am-
takes a while.
Takes a while. Yeah, I'd imagine. I imagine it would take a while. I'll link the stock draft in the chat for those that haven't watched it. Are we? Go
I
ahead.
got a fun game for tomorrow night.
Okay, yeah. So this is the game you told me about, right?
Yeah, so I'm gonna print out a.
So pitch the game to people, because let's see if people think it makes sense before we actually go through with it.
So
Let's see.
we're gonna do. We may do a NCAA stock draft with the top 64 companies in the S&P to decide which company we think is going to do the best next year. And I'm going to seed it top 4 versus bottom 4, like the same way the brackets would be for the NCAA tournament. Hopefully I have, like right now, I think I'm going to have that much time tomorrow. So let's see. I actually took the day off today and had to take 3 meetings. So
I feel like
got
ChatGPT
nothing-
can do it for you, right?
I mean,
Like,
do
if
you
ask
think
her to make-
ChatGPT could do that for me?
as long as she doesn't get the order wrong, which you can give her the order from a website, just copy and paste it. But does that make sense, guys? Like this top 64 going against each other? Because it's not really a draft, but it's also like, hey, do we think this stock will outperform this stock? But the bracket itself is going to complicate things, because maybe this stock doesn't outperform this stock, but it does outperform the other stock. But then again, if you're the best performing stock, you have to outperform everything. So technically, just like if you're an NCAA champ, you have to beat everyone, even if your route might be a little harder or easier to get there. So we can try it and see how people think. And I think ChatGPT can help with that.
I'm trying
In terms of
right
an
now.
actual, you're trying right now, yeah. In terms of an actual 2026 draft, we will probably do that eventually, but we got to get everybody together to do it.
I mean, it'll be June when this one's over.
Yeah, I feel like it should be when this one's done. We should start.
I mean,
and also,
do we really want to have another one going with us?
it's a good idea. Yeah, we should also have 6 months of data to see how the market's doing before we.
I mean, remember, just because somebody's winning now does not mean somebody else cannot win in 6 months from now. 6 months from now is a lifetime with the market.
Yeah, exactly. I agree. You can have LLMs interact with it as well. Yeah, I think that's not a horrible idea. So that'll be how we think of it for 2026. But it should be fun. It should be fun. Dude, Elon said this today. I think he's lying about this, but if he does this, it would be crazy. Elon's saying that X is going to start paying people more than YouTube. I don't know. I don't think they make enough money to do. I don't know how. Like,
I guess I'm going to be posting on X a lot.
no, but like YouTube's monetization system is very sophisticated. X it's just not. X I see is more as distribution, not for making money. So I don't know how they're going to do that. Unless they just say, hey, we're going to lose a lot of money. I mean, because he was responding to this tweet, which I fully agree with this tweet. Like, it makes sense. If I were at X or Elon, I'd crank creator payouts way up, maybe even more than YouTube. You can eat the cost to try to win AGI because the platforms that actually pay will be the only ones that have any authoritative content left once the LLMs finish eating the rest of the internet's homework, which they have already done for the most part. Grok's differentiator is this. He's right, because X and Grok is all based in real-time data. And if you're producing real-time data, you should be paid for it. The problem is on X, there's a lot of shit that gets views that's fake or that's just clickbaiting. And same thing with YouTube. But YouTube at least has watch time to figure out if the algorithm, like X just has ad impressions. It's easy to get impressions if you're being super crazy. So they have to figure out how to make it make sense. But
dude, ChatGPT for the win.
Yeah, when you described it, I felt like ChatGPT could figure it out.
It just gave me the regions: East region, West region, South region, Midwest region.
There you go.
Didn't give me enough regions, but it's working on it.
Elon said,
oh, no, it did. Okay, it gave me the, yeah, okay. It's making me a full bracket now that we can print out. That's crazy.
All right, maybe this works.
Dude, and people are bearish on AI. What is wrong with these people?
Who's bearish on AI?
The bears. They came out of hibernation in the middle of winter to be bearish on AI. They're crazy.
It is kind of great. Look, if you've been a bear, okay, and there's a few bears that I know that are constantly DMing me, constantly in the chat, and I don't ever call them out or pick on them in particular, but I see them every time we have a red day. I mean, it's got to kind of suck if you were in cash that the market ended up recovering basically at all-time highs. Yes, it's not 7,000, but it's at 6,900. And that's how we're ending the year. Now, not saying 2026 can't be that 2022 year that all the bears have been hoping for. But if you stayed on the sideline this year, you missed a big freaking year, especially from April.
Hey, if you look at all the money in money markets, if you were the T-bill and chill person, you got destroyed by the market. Like, it's not even close. You got literally destroyed by the market.
And the funny thing is, you thought you were going to be right in February. That didn't work. You thought you were going to be right in April, and it's like the world was falling. That didn't work. Then you thought you were going to be right in November. That didn't work. So it's like, it's so hard to be bearish because for all the forces that Steve constantly talks about, 401k, retirement, all the passive income, like, to go against that is not easy. And you
How
have
do you
three
think about it? We are not a country that has a ton of pension funds. How are we going to go against everybody putting into a retirement account and the largest companies in the market get the lion's share of that capital? How?
Also, to that point, you need something structural to break. Like, we're talking about bear market, 20% drawdown, sustained, no V-shape, especially in this economy with the amount of dip buyers and everything Steve talks about constantly with passive income investing. Like, you need something structural to break the flow of capital. Oh, even Michael Burry, I think, was talking about this in his latest podcast, where he mentioned that one of the things he's underestimating is the level of passive money. And he actually compared it to the dot-com bubble, where there wasn't passive money coming into these ETFs every 2 weeks in the 2000s. It was actually a lot more exuberance of people individually thinking that they could pick the right stocks. Now it's like, you could think you're picking the right stock, you could be wrong, but there's like institutional money coming in that's supporting your pick, even if you're still red on your pick. And that's hard to fight back. Yeah, you need something like serious with the tariffs for that to be a risk. You need something serious geopolitically. You need something to break, like inflation going up 10%, which I don't think that's happening. It doesn't mean we need another 20% year, but it also means to get 20% down, something really has to be. And again, this is what I was talking about in the morning. NVIDIA trades at 25 times, Meta trades at 18 times. I think it's really healthy that a lot of these names have come down to the point where Meta's up 7% for the year. Like, amazing. That means Meta doesn't have the crazy expectations that it would have if it was trading at $850, which would be an appropriate multiple for Meta to execute next year. They can start from a smaller base.
All right, so you guys see what ChatGPT just spit out. And it's not perfect, but it is pretty freaking impressive after all the shit it just did. I mean, it basically gave us all the matchups.
Oh, wow. So the first one is NVIDIA versus Bookings, Broadcom versus Qualcomm, Apple versus AT&T, Meta versus GE Verino. These are things you actually have to think about. They're not.
I mean, some of that, and this is legit because this is exactly how it goes. Apple versus AT&T, I mean, 1 versus 16 seed, and then 2 versus 15 seed. I mean, this is awesome.
Yeah, I mean, where's Palantir? Who does Palantir? Palantir versus Thermo Fisher. Palantir's number 5. Palantir
It's in a
versus
5
Thermo-
seed.
Dude, this is cool. This is actually, now that I'm seeing it, this is a great idea. This makes a lot of sense. It'll be fun. We can have the chat help. And if you and me disagree, the chat is the tiebreaker.
Oh, they didn't. And this is where it gets so fucking hard, just like the NCAA. Look at right here, Matt. Cisco versus IBM, 8 versus 9. Either one, that's a toss-up.
That is a toss-up. That is
Like,
a toss-up.
This is hard.
This is why, Steve, my market open froze for 30 minutes today and my internet shut off without warning because they're building all these data centers in New Jersey for this shit, for us to do NCAA stock brackets. Like, that's why my internet doesn't work. This is pretty impressive, though. Like, every day, ChatGPT finds another way to impress me with what it does. We just need that 2 billion consumer use case from like an Apple or a Meta for this shit to go vertical. And hopefully next year we get that. No, it was because of your face amid. I did have to shut off the camera to get it to work. No, but realistically, I really do think the data centers in New Jersey are messing up my building's electric grid. Either that or this is just
Dude,
like,
why don't you just get Starlink?
people were saying that. People were saying I need to get that. Maybe that's the solution.
It's a write-off.
And then you're going to be 90 telling your grandkids this story. Future mid kids, back in my day, those data centers took my internet. Dude, that is kind of crazy. Like, what we're going to be telling our kids towards the end of this AI revolution. I mean, I don't know when I'm 80, I don't know what the new tech is going to be at the time. But right now it's AI. And we get to live through this shit, which is the coolest part. We get to actually live through it.
How we're bearish on AI, and this is the worst it's ever going to be.
Yeah.
Come on. Like, we don't, and this is where I get annoyed because you think about 10 years ago, technology was so different 10 years ago. The rate of change and the rate of advancement is going to be so crazy over the next decade. Yeah, you're right. They'll be laughing at us for having to prompt ChatGPT 100%.
Dude, with like ChatGPT should just know whatever the ChatGPT of the time, they should just know everything about us and be able to do everything that we need to do without us even saying anything. Which is going to be crazy.
It's going to be great. I'm so ready.
All right. I think that's it for us today. Steve will be live tonight with Mr. Tanner. It's going to be just moves, right?
No, we're
No
going
stocks?
2 times.
You're going live
Matt and
before?
Matt and I will be live at 6:15 in 25 minutes.
See, this is what we're talking about when we need work ethic.
And then Tanner and I will be live at 9 tonight.
Can we just take a moment to appreciate another reason why my internet keeps shutting off? So because Steve and this freaking Gemini. Look at this shit, bro. Look, like these thumbnails are incredible.
I mean, the one with the White House in the back is so legit right there.
Oh, this one? Yeah. Oh, I didn't even notice it was the White House.
You didn't notice it? It's
No,
with the
I-
White House quant.
No, I didn't notice the White House was in the background.
The thumbnails are fire.
You are using AI the way it needs to be used. Look at that. Matt's got a bow tie on. Breaking meta news, meta logo. I mean, this is perfect.
I am, learning how to use AI, so to speak.
All right, cool. Again, I'll put Steve's link right there in the chat. He'll be live in literally 30 minutes and 25 minutes, and then he'll be live with Tanner. We'll be both live tomorrow, New Year's Eve. Tomorrow is the last day of the year for 2025. I will have an article come out in 2 hours on my Substack. If you follow me on Twitter, you'll see the tweet update. If you follow me on Substack, you will see the notification. That is a very long article. Put in a lot of hours to write out all of my thoughts going into 2026. It goes pretty much in depth on every idea, philosophically, technically, materially, that I have for next year. And so for anyone who's interested in that, you can check that out. And then we'll be live tomorrow. And that'll be pretty much it.
Tomorrow will be fun. Maybe you're going to have a drink tomorrow night?
I will have some Jaeger. I will have some Jack Daniel's honey. Have some Red Bull. It'll be a fun night.
Are you trying to get drunk here?
Trying to get a little buzzed.
You know what? I think I'm going to do. You know what I'm going to do? I think I'm going to make a big fillet and have a nice big glass of wine tomorrow to finish the year out. I think that's what I'm going to do.
That's a great idea.
I'm going to open a bottle of Silver Oak for no reason other than to have a glass and pour the rest out because my wife is not going to drink it. And then make a fillet for myself.
I love it. That's what I'm going to do.
Medium rare, like a mitt. Medium rare.
Yeah, look, I think it'll be fun. And the goal is not to get super, super wasted or anything, but just to have a couple drinks and enjoy ending out 2025.
Yes.
Dude, champagne. Yeah, usually New Year's is champagne. I don't have any champagne, but we'll definitely have some drinks. All right, that's it. Thank you, everybody. Appreciate it. Hopefully you guys enjoyed the giveaway. We'll do a lot more of that. Again, please make sure to email me if you won with your screenshot of your YouTube account. And Steve will be live in 20 minutes. I'll be live tomorrow in the Market Open.
Have a great night, everyone.
Bye, everybody. Have a good one. See you guys tomorrow.